going broke? Now that's just a nightmare that nobody ever wants to have. The thought of it happening really makes you just want to scream. Everybody wants to know what's happening to their money, and it really doesn't matter what type of jobs you have. As long as you have money, you'll definitely keep close tabs on your finances that move around. Now don't get me started on how the interest rates play a key role in how much money moves around. I mean, money does fluctuate and nobody ever wants to run at a loss whatever business they own or venture they're into. So in this video, we'll explain how interest rates can affect your money and save you from going broke. What do you think interest rates are? An average individual will tell you that an interest rate is the price you have to pay for borrowing money. And that's not surprising because that's actually correct. In a typical financial deal, there's a borrower, somebody who needs access to cash. And then there's the lender, somebody who already has access to cash. When lending money, there's always some probability to risk that the borrower won't actually repay it. To minimize this exposure of risk and gain something from loaning them money, lenders charge interest. The amount of interest they charge is determined on the interest rate. When it comes to money, you could say nothing goes for nothing. How interest rates work? Interest rates are expressed as a percentage. For example, a loan has an interest rate of 5%. That means you have to pay the lender back the amount you borrowed plus 5% of that. The length of time you borrow the money also gets factored into the equation. Simple interest equals the amount of money borrowed times the rate times the time period. So if you borrow $1,000 at a rate of 5% for 1 year, the calculation would be 1,000 times 0.05 times 1. The interest you would pay would be $50, and then the total you would repay the lender would be $1,050. The financial institution that loans out the money can also profit from the loans, and you can definitely bet they're going to come for what is owed. It would really suck if you found yourself in a scenario where you owed a bank. It can get a little more complicated than this though. Simple interest means that the interest is charged only on the money borrowed, but in a situation where the interest is compound, it is calculated on the money borrowed plus the interest that has occurred. It is important to know whether the interest on a loan is compounding and how often it is compounding. Is it daily, monthly, or annually? Because it will affect the total amount you have to pay over time. You can imagine how much these banks or credit unions will be making on loans that they're giving out. And it's a ton. How interest rates affect your money. I bet you're itching to know the real deal, the answer to the burning question in your mind. How does interest rates truly affect your money? Well, this is what you're looking for. Relating the effects of interest to the economy, interest rates can have a profound impact on the economy and ultimately on employment prospects. Rising rates usually occur when the economy is expanding rapidly and the labor market is robust. By demanding higher rates, the market is saying that it expects inflation in the future with high growth. In such situations, actions will be taken to push rates higher in order to cool the economic growth and dampen inflation. Conversely, rates are usually falling when economic growth is slowing down because investors in general predict the slower economy and slower inflation in the future. As to how interest rates affect your personal money, it totally depends on three things, which are mostly whether you're a borrower, a lender, or an investor. And it's very possible to be any of these three things at any given time. I'm sure making smarter decisions toward your financial goal won't be such a big deal now that you understand how interest rates affect your money. Thank you so much for tuning into this video. If you haven't already, please go ahead and like the video and subscribe to the channel if you're new. And we'll see you in the next video.